Some people find trading stressful, but not me. Hi, I'm Shafiq. I'm a vlogger and trader, and today I'm sharing my best kept trading secret with you. I trade in local and global markets while on the move or even when I'm sleeping. I was one of those who were clueless about trading, but today it's all at my fingertips, 24/7. And I mean literally. Here, I trade in equities and futures at ease, and most importantly, at real-time prices. Everything you see here is live. And there's also live alert allow me to take action when the price is right for me on the Bursa-listed stocks. When it comes to a trading platform, you really want one that is convenient and what works best for you, preferably one that offers better trading opportunities. When you see a good trading potential but you lack funds to trade, no problem. You have access to additional financing. The secret to being a good trader is not a secret at all. Once you have found the right trading platform, equip yourself to make informed decisions. Only the right trading partner will make sure of this. I truly appreciate the daily current updates by trading research analysts on the RHB morning cuppa at 8. It keeps me informed and up to date. With RHB Investment Bank, it doesn't matter what trading experience or strategy you have, your individual needs will be met. They are committed to you. And because of that, they are available for you anytime, anywhere, even when Malaysia is asleep and trading is active on the other side of the world. This multiple award-winning service is the right fit for any trader. It's even more rewarding when you can collect loyalty points for great rewards every time you trade. Nothing is more worthwhile than this. What are you waiting for? Download the app and start trading.
Hi, a very good afternoon, everyone, and welcome to today's Chief Investment Officer Insights session, Return of Trump 2.0, Implications and Impacts for Asia. My name is Alan Lau. I'm your moderator for this session. So in this session, we will be exploring the re-election of Donald Trump, which could signal changes in the US-China relationships, trade policies, and as well as all the regional alliances, all of which could have a profound effect on Asia economics and also the markets. And while China's evolving economic strategies, including its focus on domestic consumptions and geopolitical maneuvers, present both challenges and opportunities for investors in the region. It will be discussed and also explored by Jee Toon later. So this session promises essential insights to help you position your investment for success, right? So it's my pleasure to introduce our distinguished speaker today. Is none other than Mr. Tan Jee Toon, who is the Chief Executive Officer and also the Chief Investment Officer of RHB Asset Management Singapore. He's a CFA charter holder, and he brings extensive expertise in driving investment strategies across the region for RHB Asset Management. All right. So joining our panel of moderators today, who will help to facilitate this discussion, is also Muhammad Wafi from RHB Sekuritas Indonesia, Tanya Lak from RHB Securities Thailand, and also Eve Ranarit from RHB Securities Cambodia. Thank you for joining us today, guys. Okay. But before we move into the presentation, please let me cover a few housekeeping points and some special promotions exclusively for you today. So first on the card is let me introduce RHB's main. All right, just a quick reminder first. What is coming up? There's an upcoming event by Mr. Barnabas Gan, our acting group chief economist, on Monday, 25th of November, from 1 p.m. to 2 p.m. He will be talking through with us on his topic, which is titled Trump 2.0, Maintaining Our Goldilocks Outlook. Right. So mark your calendar and please make sure to join us on this coming Monday. Next is our RHB main and exclusive campaign for 2024, where you can trade and also earn entries for a chance to drive away with one of the three Activas SUVs and also amazing vouchers worth up to 200,000 ringgit to be won. So this campaign will carry on until December, end of this year, 2024. Next is our morning Kappa at 8 Facebook group is now open for general public and for daily stock market updates. So you can actually scan the QR code on the screen to get your access now. Okay, and lastly is our exciting share margin financing campaign. So by opening a new share margin account now, you will enjoy low interest rate of 5.3%. Facility fee waiver and 5 times smart points on every 1 ringgit brokerage for foreign trades. Yeah, so don't miss this amazing opportunity. This campaign will go on until 30th of June 2025. All right, let's move on to our regional counterparts for their campaigns and promotion. Wafi, over to you.
Yeah, thank you, Alan. Allow me to present it in bahasa Indonesia. Selamat siang, Bapak Ibu. Ya, sebelum kita mulai acara siang hari ini, ada beberapa promo dari RHB Sekuritas Indonesia. Yang pertama, manfaatkan smart fee transaksi yang akan memberikan kemudahan penurunan biaya fee transaksi seiring dengan kenaikan nilai transaksi Bapak Ibu serendah-rendahnya adalah 0,08%. Kemudian manfaatkan juga smart rate di mana ada promo bunga margin sebesar 9% per tahun atau sebesar 0,025% selama 2 bulan untuk akun margin baru dengan transaksi aktif dan saldo awal minimal 50 juta rupiah. Kemudian over the next page, kita memiliki smart point di mana setiap kali Bapak Ibu melakukan transaksi, Bapak Ibu akan mendapatkan point reward yang dapat ditukarkan dengan saldo e-wallet, serta manfaatkan fitur smart analyzer untuk menganalisa saham lebih mudah menggunakan fitur arrow, dan yang terakhir adalah smart order. Next slide. Selain itu kami juga memiliki platform RHB Trade Smart Syariah yang memberikan fasilitas berupa seamless digital opening account, real time, very quick, easy, and smart. Next slide. Ya, selain itu saat ini kami juga sedang melakukan kerjasama dengan Bank Panin. Bapak Ibu yang pertama kali membuka account dengan menggunakan Bank Panin sebagai RDN, manfaatkan fasilitas cash reward dari Bank Panin mulai dari 50.000 hingga 200.000 rupiah untuk pembukaan account untuk pertama kalinya. Manfaatkan semua fasilitas promo dari RHB Sekuritas Indonesia dan download aplikasinya di App Store dan Play Store. Oke, next slide. Ya, dan juga jangan lupa untuk follow akun sosial media kita di Instagram, TikTok, Facebook, YouTube, dan juga di X. I think that's all from Indonesia. Alan, back to you.
Thank you, Wafi. Okay, let's move on to Thailand. Tanyala.
Thank you, Alan. Thank you, Wafi. สวัสดีค่ะสวัสดีตอนบ่ายสำหรับท่านผู้ฟังทุกท่านของประเทศไทยนะคะโปรโมชั่นของเรานะคะของ RHB ประเทศไทยค่ะเรายังคงอยู่กับโปรโมชั่นลดค้าฝนนะคะสำหรับลูกค้าที่เปิดบัญชีนะคะรับค่าคอมมิชชั่นพิเศษสำหรับบัญชีหุ้นเลยค่ะแล้วก็บัญชี TFX นะคะแล้วก็สำหรับตัว Currency Future ค่ะเป็นสินค้าใหม่นะคะสำหรับตัว TFX นะคะท่านใดที่เปิดบัญชีนะคะรับทันทีเลยค่ะ Tesco Lotus Voucher นะคะมูลค่า100 บาทค่ะสำหรับท่านที่เทรดนะคะตัวยูโรไทยบาทฟิวเจอร์แล้วก็ Japanese ไทยบาทฟิวเจอร์นะคะท่านจะได้รับทันทีค่ะ10 สัญญาจะได้รับ Tesco Lotus นะคะแล้วก็ตอนนี้นะคะสำหรับ RHB ประเทศไทยค่ะเรามีโรบอทเทรดนะคะตัวSet Trade Open API นะคะสำหรับนักลงทุนท่านใดที่มีความสามารถในการเขียนโรบอทนะคะให้ทาง RHB นะคะมีเป็นทางเลือกของท่านสำหรับการเทรดตัวโรบอทนะคะตัวฟิวเจอร์นะคะกับเราค่ะ next please ค่ะแล้วก็สำหรับท่านใดที่สนใจบล็อกเทรดนะคะยังคงรับดอกเบี้ยสุดพิเศษตั้งแต่ออเดอร์แรกเลยนะคะแล้วก็สำหรับท่านที่เปิดบัญชีนะคะยังไม่เคยมีบัญชีบล็อกเทรดกับเรามาก่อนแล้วก็เปิดบัญชีนะคะจะได้รับทันทีค่ะเมื่อเปิดออเดอร์นะคะก็จะได้รับทันที Bluetooth speaker ค่ะ collection ใหม่นะคะสำหรับ10 ท่านแรกเท่านั้นค่ะ next please แล้วเรายังคงอยู่กับตัว share margin นะคะ financing ตัวเครดิตบาลานซ์นะคะยังคงลดค่าอากรสแตมป์นะคะ 50% สำหรับลูกค้าที่นำมา refinance นะคะแล้วก็มาใช้บัญชี margin กับเรานะคะสิ้นสุดที่ธันวาคมนี้นะคะ next please แล้วก็ถ้าท่านใดสนใจโปรโมชั่นพิเศษนะคะสามารถเปิดบัญชีกับทางเราได้เลยค่ะแล้วก็ติดต่อกับเราได้นะคะที่โซเชียลมีเดียของเราค่ะมีทั้ง YouTube นะคะ Line Official แล้วก็ Facebook ค่ะ next please ค่ะสนใจโปรโมชั่นพิเศษยังไงสามารถติดต่อกับบริษัทหลักทรัพย์ RHB ประเทศไทยได้ในช่องทางทุกช่องทางเลยนะคะ thank you back to you Alan
Okay, thank you, Tanyala. All right, that's all the campaigns that we have from all across the region. So without further ado, I'm pleased to hand over the session to our speaker today, Mr. Tan Jee Toon. Jee Toon, over to you.
Thank you very much. Thanks, Alan, for the introduction. Before I start, I just want to express my appreciation and warm welcome to everybody who has join us from all over ASEAN. So I think that's the power of RHB. We are able to bring together our expertise all over ASEAN on behalf of our clients. Okay, so once again, thank you very much, RHB Securities, for inviting me for this session this afternoon. Okay, so I think, like what Alan has mentioned earlier, I think the most important driver of the market right now is obviously Trump 2.0, right? But as it relates to Asia, I think things are a little bit more nuanced, because on one hand, we have Trump 2.0. On the other side, we do have Xi Jinping embarking on one of the largest China stimulus that we have ever seen, right? So I think these are two counteracting forces that is driving the Asian markets right now. And I do think that is why 2025 is shaping up to be a very, very interesting year for all of us here who are all based out here in ASEAN. Okay, so for today's presentation, I'm going to break it up into two portions. One portion, we will be talking about Trump 2.0. We are going to look at possible policies and market implication. And once again, I just want to highlight, obviously, Trump has only recently won the US presidential election. We don't really know what his policies are going to be when he eventually take office in January of next year. So what we are going to do today is we will try to make an educated guess from all the promises and proclamations that he had made over the last few months during his campaign trail. Okay, so we'll analyze what we think are some of the key proclamation and promises. And with that, we'll use it to analyze some of the key macro drivers that would drive the market in 2025. Okay, so once again, we are going to use our crystal ball and try to anticipate what can possibly happen when Trump finally take office in 2025. And as all of you are well aware, the problem with trying to forecast the future or to foretell the future is that sometimes we get it wrong. So once again, and even more complicated is this time around we have Trump. I'm not even sure whether Trump knows what he's going to implement once he takes office, right? So that makes it doubly or triply hard for us as investors to try to anticipate what can happen in 2025. Okay, then the second one that I want to talk about is China stimulus. I think a few months back I did come to this forum to talk about the Chinese stimulus and why I thought that the China stimulus is once again very, very significant and is one of the most important things that has happened in 2024. And I think this will provide a very interesting backdrop against what all the policies that Trump is going to implement in his time in the White House. Okay, so these are the two topics that we're going to talk about today. And very quickly, I think what is interesting from this chart here is quite clearly that Trump has the very strong mandate from the American people. Right, I think one of the worst case scenarios that all of us were very fearful of in the market, at least, was that there's going to be a minor victory on either side, be it Harris or Trump. Just a minor victory, and that sets up the market for total confusion. But if you look at the results, it was quite clear that Trump has a very strong mandate. Right, he won in all the 6 key swing states that the focus was on, and he won all of them. And with the current vote, 312 versus 226, it's quite clear that Trump is in the driving seat and he has the mandate from his people. And that's very important. And second of all, which is a bit of a surprise to most people in the market, was that he has the majority in both the Senate and the House, right? So this is what we call a red sweep. So in essence, the Republican parties has the American presidency. They also have majority in the Senate and in the House, which makes it very, very easy for Trump to pass through policies and regulations, right, with the support of his own party, right? So that makes for what we call a red sweep, right? So that's why the market has reacted, and we can talk more about this in the subsequent few slides. So once again, these two slides very clearly shows us that Trump has the mandate, right? Has the mandate. Next. what we're going to talk about over the next 2 slides is some of these key campaign promises, or what we call proclamations, and also some of the possible policies that he can implement. Okay, the first one we're going to talk about is cutting of tax rates. Trump has made it very clear during his campaign trail that he will cut the tax rates. He will extend the 2017 tax rates that he implemented, and he will extend it during his second time in the White House. So that's one. Second of all, he did talk about cutting corporate tax rate from 21% to 15%. Okay, last but not least, he did speak about eliminating federal income tax. We don't really know which one of these, or it might be all of these, he might implement during his time in the White House. But all we know is that in general, we can expect tax rates to be cut, in particular for corporates. Okay, so our view is that I think the second one, which we have here, the lower corporate tax rate from 21 to 15 will probably happen. May not be 15, but it will definitely be lower than 21%. And definitely, I think he will extend his own tax cuts that he implemented in 2017. Okay, next, he did talk extensively about deregulation, right? And the market is expecting that he would delay the Basel III implementation for the US banks, right? If the Basel III were to be implemented, then the US banks would need more capital. But if Trump were to delay Basel III implementation, then banks would need less capital. And that's why you see banks are rallying because of this possibility, right? And on top of that, he did talk about broad-based deregulation across all industry, right? There were talks that he might deregulate the banks, the pharma, agriculture, big corporates, right? So all these things are what he spoke about during his campaign trail. There were very little specifics for us to actually bite and analyze, but in general, I think deregulation is the game here. Last but not least, he did talk about easing regulation on the cryptocurrency industry. And as such, you can see Bitcoin has rallied massively over the last few weeks, right? So once again, it's deregulation is the buzzword for him. The third point that he has highlighted extensively was he wanted to control immigration. And he promised, in his own words, the largest deportation in the history of our country, which means in the US. That was what he promised during his campaign trail. He has talked about building the wall and talking about further restrictions on immigration. But what people are worried about is the deportation of so-called illegal immigrants in the US, right? So, but I think these three are probably some of the more prominent policies and prominent promises that he has mentioned during his campaign trail, which is to cut tax, deregulation, and control immigration. Moving on, as we all know, I think Trump is a denier of climate change. He doesn't believe in global warming. So it's highly possible that he might once again pull the US from the Paris Climate Accords for the second time, right? That's highly likely. And also, he might reverse the limits on energy projects that were put on during the Biden administration. And the market is also responding to the possibility that he might reverse Biden's administration pause on issuing new licenses to export LNG from the US to other parts of the world, right? And the last thing, which is I think is the most interesting one, is he has talked about rolling back of auto emission standards, because he views it as very, very strong support for the electric vehicle market, which means it is advantageous to the electric vehicle market at the expense of the traditional internal combustion engine vehicles, right? However, I'm sure all of you are well aware that over the recent few months, we have seen more and more of Elon Musk, right? And obviously, Elon Musk is involved in Tesla. So we don't really know how the Elon Musk impact on all this rolling back of auto emission standards, okay, that he would have, right? So this remains to be seen. But in general, I think we can say that probably for the Trump administration, they would not be a strong supporter of the climate change as compared to the Biden administration. The fifth one, I think it's the more interesting one also, is that would there be resolution of the armed conflict? So right now, I'm sure all of us are well aware, the Russian-Ukraine conflict has been going on for the last 1,000+ days already, right? I think people are speculating whether Trump may or may not support Ukraine or may not support Ukraine to the extent that the Biden administration did, right? So this remains to be discussed once he take over the administration. So this is something that people are talking about. I think you have seen news that Trump and Putin might have further conversation to see how they can resolve the whole Russia-Ukraine conflict, right? And the other more important point is the Israel-Hamas issues, right? So I'm sure all of us are well aware during the Biden administration, they were very, very supportive of the Israelis, and whether that would change under the Trump administration remains to be seen, right? But all in all, I think during his last administration, Trump has made it very clear that he's not in favor of these forever wars, right? So, and I think market is of the view that there might be some de-escalation of some sort for both these key armed conflicts that we are having in the world right now. Okay, and the last point I want to highlight is in terms of tariffs, right? During his campaign trail, okay, this is what he said, that he would have tariff of at least 20% on all imports, as long as they are imported overseas. He would have a 20% tariff on all imports. And he also did mention that he might even increase tariff on Chinese imports all the way to 60%. And he also did talk about a 20% tariff of imported vehicles from Mexico. So once again, right, these are all his proclamations during his campaign trail. Whether it will happen or not remains to be seen. But obviously the market is reacting once he got elected. Okay, but right now the market is also thinking, is this all a negotiating tactic? Is it all more buck than bite? Is he going to talk about 60 as a upper limit for the China tariffs and wait for the Chinese to counter propose and maybe try to bring it down from that 60? So once again, all this remains to be seen. Okay, but these are some of the 6 key campaign proclamations that he has made over the last few months, and some of the possible policies that will happen as a result of these campaign promises. Okay, over the next few slides, we will talk about if these policies were to be implemented, what will be the impact on some of the key macro drivers. Right, we're going to talk about 7 key macro drivers today. So in terms of inflation, our view is that I think during the Trump administrations, chances are inflation will be higher if Trump were to carry out all the policies and proclamations that he has made during his campaign trail. The reason are as follows. The proposed tariff hikes will definitely increase costs. If you were to increase 20% tariff on all imports, no matter where they are from, definitely this will increase costs for the US companies, and the US companies would have to push through a lot of these tariff hikes onto the consumer. Same thing for the Chinese imports. Especially right now, if they were to hike all the way up to 60% for all Chinese imports. Because right now, only certain categories of Chinese imports are probably taxed at around 25 to 30%. Right? If you were to increase it, definitely costs will increase, inflation will increase for the Americans. The other part is tax cuts. If tax cuts were to happen for both consumer and for corporates, I think it's likely to be inflationary as well. Because all the savings that the corporates or individuals will have because of this tax cut will likely result in more spending. And this more spending will obviously lead to higher inflation. And the last point will be in terms of deportation of illegal immigrants. Bear in mind that illegal immigrants, some people are talking about, is it just those people who are criminals? And if they are criminal, then they might be imported. But some people are talking about, as long as you are in the US illegally, you might be deported as well. And bear in mind that a lot of these illegal immigrants in the US might have been in the US for the last few decades. So they may already have proper jobs, except that they are in the US illegally. But if the US were to carry out widespread deportation, that might inflate employment costs as well, because all these people are gainfully employed in the US market, right? So all in all, our view is that chances are inflation might increase. Next, interest rates. Interest rates. And because of the fact that inflation might stay higher or might even increase, our view is I think interest rate might stay higher for longer. Or at the very least, right, US Federal Reserve may adopt a shallower path and a slower path for interest rate cuts. Before Trump was elected, the market was expecting anywhere between 6 to even up to 8 cuts, right, over the course of the next few quarters. But right now, the market is only pricing in 3 to 4 rate cuts from now till the end of 2025. So the market is already responding already. The market is still expecting interest rate cuts, but obviously it's going to be much slower and much shallower, right? And the reason are as follows. Because if Trump were to have his way and he carry out his tax cuts, it's inevitable that the US debt load will be higher. US debt load will be higher, right? Because at the end of the day, if you were to cut interest rates, then US government will still need to spend. But how would they make up for the lower taxes collected? It has to come from higher issuance of US debt. So as a result, right, it might lead to higher treasury borrowing costs and therefore higher interest rates. So all in all, if you look at in terms of interest rate cuts, if you talk about inflation, I think our view is probably interest rates might stay a bit higher for longer, and the interest rate cuts that people were expecting might be a lot slower and it might be a lot shallower. And as a result of these two things, I think currency, in terms of US dollar might be stronger. It might be stronger because once again, we have fewer interest rate cuts because of higher expected inflation. And the other thing is because Trump is all about MAGA, making America great again, America first. So there'll be a lot of pro-US policies. Unfortunately, a lot of these pro-US policies will be at the expense of everybody else. So as a result, right, at least initially, we might see a reaction in terms of stronger US dollar, right? So this will help the US dollar at least in the shorter term, right? And the fourth thing I want to talk about is corporate earnings, right? Our view is at least in the near term, it will be higher for American companies because simply, if you just cut the tax rate, definitely corporate America will benefit because you pay lower taxes, right? And if you were talking about like what I mentioned earlier in terms of deregulation in the US, for example, delay of Basel III, deregulation in the tech sector, deregulation in the pharma sector, deregulation in the agriculture sector, it will make it easier for US businesses to do business in the US, and therefore that will definitely help corporate US earnings. So in the shorter term, corporate earnings will be higher, but there will be other forces at work as well. For example, if we were to push through the tariff, I think it will hit margins for the US companies as well as globally, right? Not only that, like what I mentioned earlier, if we are seeing higher interest rate, that will result in higher borrowing costs for everybody, Americans included, American corporates included, definitely. Okay, so higher in the near term in terms of corporate earnings, but it will be mixed in the medium term because of the rest of the policies would start to have an impact on corporate America. The fifth point I want to highlight is what about GDP growth? I think in the near term, once again, GDP growth in the US in the near term might be higher, right? Because simply, like what we mentioned earlier, pro-US policy, right, will help the US in the near term. But with these pro-US policies, like what I mentioned earlier, and the tariffs, and higher borrowing costs, I think inflation might rear its ugly head, and that might impede growth, not just in the US, but also global growth as well. And once again, right, Trump is only talking about erecting all the tariffs and all the protectionist measures, right, from the US standpoint against everybody else. But chances are there will be tit for tat retaliation by US trading partners in response to the tariff hikes by the US. So in the end, US might be hurt as well. But obviously, that will take some time to enact because everybody else will need to see what Trump would have to come up with before reacting. Right. So in general, we have to see what Trump comes up with during his term, right? Before we can definitively say what is going to happen to global growth. Okay. On the 6 points in terms of geopolitics, I think he has made it very clear that there will be less US support in terms of all the armed conflict. Right. Is there a possible end to Ukraine? Then that'll be great for Europe as well. Same thing for the Israel-Hamas conflict in terms of impact on oil, right? So, however, knowing Trump, it's always been pro-America, America first. And if there were retaliation, right, that might also ratchet up the geopolitical temperature as well. And I think more importantly, right, I think even its European allies also have to worry. How would Trump treat them the second time round? Because we know the first time round, Trump was actually against Europe, was against NATO, and they expect Europe to pay for US presence in Europe, right? So how will all this play out the second time he's in the office? And the other thing I want to highlight is also the China-Taiwan tension, which is more relevant for us here in Asia. Right. So unlike Biden, who made it very clear that he is very supportive of Taiwan's viewpoint of view, right? But whether Trump would carry on that line of thought remains to be seen, right? And the last point I want to highlight is valuations, right? Valuations in the US, we have seen US market has reacted very positively, right? From all the points I've just highlighted earlier, but at some point in time, right, then the market will have to start to think about not just the near term, but something a bit more in the medium term or even in the longer term. What will happen to the bond yields? What will happen to borrowing costs? What will happen to the fiscal deficit? Will US continue to print more and more money? Will the world continue to have to absorb the huge issuance of the US debt? So all this will start to have an impact on the market. But having said that, right, that will be in the medium term. Right. Right now, you can see in the market, it's all short-term knee-jerk reaction in terms of pro-US, US market doing very well. Right. So to me, these are natural and it makes sense. It makes pure economy sense. But at some point in time, especially as valuation gets higher and higher and higher, then all the risk factors will start to come in. Okay, and moving on, I also want to highlight a few key things that we have learned from Trump 1.0, and also more importantly, what the markets are saying or what the world is saying about Trump coming into the White House in 2025. Okay, so on this chart here, just want to highlight the tariff impact from Trump's first tariff war with China. So on this slide here, on the left, what we have here are absolute value of China's exports to the US, which is in blue, and the one in green is China's exports to ASEAN. So if we were to look at 2020, 2015, 2016, 2017, you can see there is a marked difference between the exports to the US and exports to ASEAN from China. There's a very big difference. But when the trade war happened from 2019 onwards, and you can see 2019, 2020, there was a bit of disruption because of obviously the COVID impact. But if you look at the recent few years, you can see a very clear trend that the exports to ASEAN is catching up very, very fast to the exports to the US. So much so that if you look at the chart on the right, China export to the US as a percentage of total China exports and China exports to ASEAN as a percentage of total China exports. You can see 2015, 2016, roughly speaking, 20% of China exports were to the US and roughly 11, 12% were to ASEAN, right? Were to ASEAN. But if you look at the last few years, right, ASEAN exports, right? ASEAN exports, right? It's almost as close as China exports to the US. But if you look at the data, does it really make sense, right? Do the ASEAN people, right, all of us here, consume as much as the Americans, right? To me, it doesn't really make sense. So how do you make sense of the numbers? I think my view of this is that China is exporting to ASEAN, and obviously because of China Plus One policy, in ASEAN, all these exports we will value add, it will be transshipped, and then from ASEAN, we will export this onwards to the Americans, right? To me, that's a more logical way of trying to understand all these numbers, right? So this, once again, just want to highlight that this was the impact of Trump's first tariff war with China, right? Obviously, there are measures, and also obviously there are countermeasures coming in from people on the ground, right? Because entrepreneurs, I'm sure all of us are well aware, are very adaptive. They are very flexible. They would definitely find a way to get around all these issues, right? So to me, I think this is a very interesting chart that I want to share with everybody. Next, if you look at this recent news article, which I think is very, very interesting, right? Because we are talking about two superpower in Asia, right? And we all know since 2020, because of some issues at the border, whereby both Indians and Chinese soldiers died, China and India's relations has been quite tense. But if you look at this news headlines here, right? News headlines here. On 21st of October, just a few weeks ago, India says that it has reached a deal with China on the army patrols along this disputed border. And 2 days after that, 23rd of October, we have this picture here. Xi Jinping and Modi shaking hands after this border accord was reached between these two countries. So I think to me, that's interesting, right? I mean, from my perspective, I'm just wondering whether the two superpowers in Asia are recognizing what's happening in the US as well, and are trying to react based on that, right? So I think for us as investors, I think for us as individual citizens as well, I think it's great that both China and India, finally the tensions are de-escalating, right? So I think that's a good thing, right? So once again, I just have to wonder whether this is an impact of Trump 2.0. Next, once again, I just want to highlight, these are the headlines that I took from some of the major newspapers, right, all over the world, right? And this is Europe reactions on Trump 2.0. Nervous Europe awaits the return of Trump, right? The French newspaper came out saying that Europeans are worried about Trump's return to the White House, right? Same thing for what the Straits Times is saying. Reuters is saying Germany and France urge Europe to unite in the face of Trump election win. And that's on 6th of November, right? The very day when they found out that Trump is going to be in the White House. So once again, right, we are seeing substantial shifts, right, in all this geopolitical relationship, right? So I think that's the interesting part that I think with the return of Trump 2.0. And also the world's reaction to Trump 2.0, is it a sign of things to come? So those of you who have been following the G20 meetings in Brazil, so I got these two headlines, one from The Guardian, UK, the other one from from NBC, obviously the US. I think they were all talking about Biden missing the family photo at his last G20 summit, right? So everybody was waiting for Trump and Trudeau and Melanie. However, the three leaders were not in the first group photo that was taken. So because the rest of the world decided that they'll go on and take the group picture without Canada, right? Without Biden, and without Italy. So to me, that's interesting, right? So is it a sign of things to come? Right. So once again, right, I think these are very interesting headlines that I just want to highlight to everybody here. Okay, next, let's talk a bit about some of the immediate market views post the US election. As you can imagine, right, like what I talked about earlier, I think it's quite clear. I think we are positive on the US equities, at least in the short term. Stronger US dollar, pro-US policies. I think this will propel US equities higher. Conversely, this might be a bit surprising to everybody. We are also positive on China. Reason is because, right, I think there is cheap valuation and also because of China's stimulus. As you can imagine, as I've shared in the headlines previously, right, you can see there is a shift in the geopolitical relationship already. Right, Biden was very, very good during his term in terms of galvanizing support, right, for the US against China with all the traditional allies. But will it be different this time around with Trump? Right, so I think that remains to be seen. Right, so as a result of all that, we are also very positive on Singapore because it's a defensive market here in ASEAN. And we are also very positive on the tech-focused Taiwan. Reason is because I think technology, AI, I think these are key structural trends that are here to stay. Last but not least, I think we have to be very careful about the US dollar, and if inflation were to come back, right, some of the ASEAN countries might be impacted because the US dollar and higher inflation would have an outsized impact on some of the developing ASEAN countries in our parts of the world, right? So these are some of the things that I'm worried about. So on the other hand, but there are also some good things that might counteract some of these views as well. Like for example, in ASEAN, for example, even though the strong US dollar might be a negative headwind, but we also know that because of the China Plus One policy, a lot of our ASEAN brothers will benefit. Right, there will be outsourcing from China to our parts of the world. Right, it will include India, it will include Vietnam, it will include Thailand, it will include Indonesia, Malaysia. All of us will benefit because of that. So these are once again, not straightforward issues. Right. Okay. Moving on, I want to talk very quickly about the other side of the seesaw. Right, on one side we have the US with Trump. On the other side, right, our view is that why we are positive on China is that I think China provides us a very, very interesting counterbalancing act to the Americans, right? And along a variety of factors. Like for example, US is very, very expensive in terms of valuation. Obviously, you're paying for quality, you're paying for the AI stocks, you're paying for the Max 7, but it's expensive versus its own history and versus everybody else. Chinese, on the other hand, valuation is very, very cheap. Very, very cheap. And more importantly, I want to talk very quickly about a few things which I think are interesting. Like what we mentioned earlier in my previous session with, a few months back, our view is that from September onwards on 2024, China policy combos were announced. Right, in our view, the Chinese policy put option was actually activated in September of this year. Right, on this slide here, you can see PBOC, China Securities Regulatory Commission, the National Financial Regulatory Administration all came together and announced a whole host of policies. Right, so some of the key policies I can very quickly talk about is in terms of RR cut, which is reserve required ratio cut of 50 bips. This will release roughly about 1 trillion of liquidity into the system. And more importantly, the central bankers said that if 50 bips is cut is not enough, they'll cut another 20 to 25 before the year end. Right, to me, that's a big, big statement here. And we talk about property as well. There have been a whole host of policies that have reversed the very restrictive policy that we saw over the last 6 years or so. Like, for example, very recently on 24th of September, the minimum down payment for second home has been cut from 25% to 15%. So right now in China, if you were to buy the second home, your down payment used to be 25%. Now it's cut to 15%, which is the same as your first home. The down payment ratio for the second home is the same as your first home. So that is a very, very, very important signal to the market that the government is very supportive of you buying another property. Okay? And the other point I want to highlight is the last point here. The government is directly intervening into the market to support the stock market in China. They've established a facility to allow securities companies, which is brokers, mutual funds, which is asset managers like ourselves, insurance company, to borrow from the PBOC to buy stocks. right? So, and more importantly, the central bankers have actually hinted, if the first round of 500 billion is not enough, right, there'll be second round or even third round, right? So the signaling impact is actually very, very strong. And not only that, if you are a listed company, right, and you wanted to buy your own shares, the PBOC or the government will lend you money to buy your own shares, and the lending borrowing rate is 2.25. So if your own dividend yield is more than 2.25, it makes total financial sense for you as a listed company to borrow money from the central bank to buy your own shares, right, at a very, very cheap rate of 2.25. So as you can imagine, right, the support from the government, from the central bank is very, very substantial in terms of trying to support the stock market in China. So the key policies have been enacted. And not only that, you can see very clearly from the perspective of the Chinese people, Xi Jinping himself came out and said that on the 26th of September, said that he will support the economy in no uncertain terms, right? And we can see very shortly after that, the whole host of policy that was enacted. 30th of September, Shanghai, out of top tier cities, is ownership in terms of in trying to boost the Chinese housing market. And if you look at the timing, right, it was just before the October Golden Week holiday. Just one day before, because they know that for the 1 week holiday, a lot of people will go back to their hometown. And if you're back in your hometown and you have released this policy, you might be persuaded to buy a property when you're back in your hometown. So you look at the timing, right? Next, 8th of September, the very first day that you're back for a holiday, NDRC came out and they said that they are very confident on growth and they will front load with 100 billion yen, right? So once again, you look at the timing, right? One very strong policy before you go off for a holiday, one policy just after you come back from your holiday. Next, then it is MOF turn. So every government entity came out one after another, and in my opinion, the signaling impact is very strong. Obviously, they rehearse this, they plan this, right? After every few days, come up with another good policy, another good policy, right? So to me, these are all very, very strong indication, right? Indication that they are very supportive. And once again, a few weeks later, it's NPC's turn. They come out and come with 1 trillion renminbi package. So the point I want to highlight to everybody is this, right? Policies after policies are coming. All the way from end of September, all the way until November, policies keep coming, right? So to me, once again, my view is that the policy has been very supportive. And I think that the policies are spending both monetary, fiscal, property, and equity market. And it's one of the most significant ones that we have seen in recent history in terms of the magnitude, in terms of the breadth, and in terms of the comprehensiveness. And the way that they announce it is also very different, right? And more importantly, right, I'm sure all of us have heard of the saying, right? Never fight the PBOC, never fight the Fed, right? When you're talking about investing into the US market. But I think it's the same thing for the Chinese market as well. Never fight the PBOC because they can print money. They can print money, they can lend money to mutual funds, insurers, and brokers to buy the stock market. They will get their national team to come in. They will get the listed company to come in to buy their own shares, right? So on this chart here, you can see very clearly the extent of the intervention into the Chinese equity markets themselves, right? And for me, I feel that this time around is different. And why do I say that? Because for any central bank or any central government, right, it's very, very rare for them to come out and support the stock market. Supporting the economy, I think that makes sense. But support the stock market, you don't usually see that all the time, right? So I think it's also the way they communicate. Xi Jinping himself came out, everybody came out, everybody take their turn every few days, give the market what they want, right? And also, you can see the reaction from the people on the ground in China. Chinese investors are buying to stocks. Chinese investors are buying property. They themselves, right, are reacting to all these changes. And also, on this chart here, very quickly, just want to say that for those of you who are looking at the company's earnings, you can see very clearly that it's on the uptrend over the last few months, right? And the last point I want to highlight to everybody is this. Light positioning in China, because I'm sure all of you are well aware that positions in China are very liked by all the global funds, because if you're Americans, if you're Europeans, you probably have very, very little positioning in China. And you can see very clear on this chart, right? Typically, they may have as high as 15% of their funds in China, but right now it's only at 5%. So for the market to go down, you can only sell what you have. But chances are that if you have so little of China right now, would you sell? Or if the market is coming up, what are you going to do? chances are, my view is that they probably need to buy more because policies are changing 180 degrees, right? Last but not least, for those of you who look at valuations, once again, I just want to highlight this chart here. Chinese valuation is very cheap, very near to the COVID lows. If you look at Chinese valuation versus the US valuation on absolute term, US is expensive versus Asia. China is also expensive as well. But if you look at US versus Asia, Asia is considered very, very cheap, right? So with that, I've come to the end of my prepared remarks, and maybe I'll hand it over to Alan.
Okay, thank you, Jee Toon, for the interesting sharing. Okay, let's take some questions. Okay, to start off the question, Jee Toon. Okay, the market is saying that China may lower or even devalue the renminbi to counter the tariff hikes. So do you think the government will adopt this strategy, or the government would prefer a stronger renminbi?
Okay, so bear in mind that when we talk about the renminbi, right, renminbi is managed as a basket, but very often, right, we will look at renminbi versus the US dollar, right? But from a PBOC perspective, right, from the Chinese government perspective, they look at renminbi as a basket, right? So for us, we have analysis that help us understand what is that basket, right? Our analysis indicates to us that PBOC or the Chinese renminbi is trading more or less in line with the basket. Because right now, what we have over the last few weeks is US dollar strengthening against almost all the currencies, right? Be it the yen, be it the ringgit, be it the rupiah, be it the Thai baht, be it the Sing dollar, be it the Korean won, US dollar has been strengthening against everything, right? So, but from the Chinese perspective, they look at it as a basket because end of the day, the trading partners would include obviously the Koreans, the Taiwanese, the Singaporeans, the Malaysians, the Vietnamese, the Indonesian, the Thais, everybody, right? So they will have to manage against a lot of different other factors as well. But in general, I don't think they will allow the renminbi to go really, really weak, because in their mind they want renminbi to be a credible reserve currency versus the US dollar. I think that is in everybody's interest. And if you look at what is happening during the BRICS meeting or the Global South meeting, it's very clear, right? They are trying to get away from the US dollar, and renminbi is one of the key reserve currency that they are putting forward. So I think that maybe against the US dollar, renminbi may be weaker, as with all our currency here in ASEAN, but versus a basket of their trading partners, I think renminbi continues to be quite strong, right? So this would be my way of looking at things.
Okay, thanks. Okay, touching on PBOC also on their latest policy. So they have also lowered the required reserve ratio, lower the prime lending rate, right? And instruct the banks to give loan as to the public listed company and share buyback program like you mentioned earlier. Should we start looking at bank counter stocks?
So in general, there are a few sectors that will benefit as a result of that. From my point of view, right? For our portfolios, for example, our RHB Big Cap China Fund, we like sectors that will benefit from the Chinese government policy, right? It will include things like even green energy. It will include things like the technology company, because of the importance of the Chinese companies to be self-reliant, right? It will also include the banks as well, because right now, banks is trading at very, very attractive high dividend yields, right? And you rightly pointed out, Alan, is that the government will work its magic, right, through the financial center, right, through the financial system, right? That's how they are going to stimulate. And this time round, what is also interesting is they are using the equity market as a way to drive up the confidence and the sentiments of the Chinese people, right? So the financial system in general would benefit because of these recent policies. Okay?
Okay, thanks. All right, let's move across the region and see if there's any question from them. To Indonesia, Wafi, you got anything for Jitan?
Yeah, thank you, Alan. Yes, Jitun, I have several questions
Sure.
came directly. You mentioned earlier there's with the Trump being elected, there is a potential for an increase in transshipment from China. So the first question is, could this lead to a rise in investment level, direct investment level in the Asian region? If so, which country would likely benefit the most from the increased investments? That's the first.
Okay. So, Wafi, you're quite right, and thank you for the question. I think ASEAN in general would be a easy beneficiary. Okay, so I think Indonesia would benefit. I think Thailand would benefit in terms of its auto sector. I think in terms of Vietnam as well, we have seen that happening. We have talked to numerous Chinese companies as well as Taiwanese companies who are trying to diversify out, right? So instead, the incremental dollar will probably come to our parts of the world. And the other regions that everybody is looking at is obviously India, right? India, because of the sheer size of its population and also the sheer size of its domestic market, makes it very, very attractive. Makes it very, very attractive for the China plus one push that we have seen the market make over the course of the last few years. So this, to me, are some of the key markets that should benefit.
Okay, thanks, Jitun. And the follow-up questions is regarding the 20% potential tariff from the US. Is it object for the most for the all goods coming to the US, or for the transshipments only from the China?
Okay, that's a very good question. Okay, my short answer is we don't really know, right? Because once again, right, these are all campaign promises, right? Will he really push through? Will he really enact all of those? Nobody knows, right? And however, I just want to highlight that tariff, right, in the American system is one of the rare policies that Trump can enact on his own because he doesn't need Congress approval. He doesn't need anybody's approval to enact tariff because that's within his right as an American president. So that's why it will be very interesting, right? So once again, maybe he has matured, maybe he has better advisors this time around. Nobody knows, right? But once again, he's also his own man, right? You can see, I don't think anybody controls him, right? Whether they can influence him enough or not, that's another story, right? But I think that if he enact a 20% tariff across for everybody, which means that all of us will be implicated, right? Because it's all relative, right? If let's say country A has 0 tariff, country B has 20% tariff, then okay lah, then we can manufacture more from country A. But if everybody all kena or have the 20% tariff, then it makes no difference whatsoever, except that all of us would suffer. Both country A and country B would suffer because all of us will have the same tariff anyway, right? So it doesn't really benefit anybody. But whether Trump recognizes that or not, that's another story. And bearing in mind, right, once again, tariff is one of the rare things that he can implement on his own, right? So it's up to him, right? And we have seen in the past, in his past administration, even his closest neighbors, right, like Canada, like Mexico's, are not safe, right? So once again, it remains to be seen how he would enact this, right? So yeah.
Okay,
Wafi,
understood.
over to you.
Yeah, thank you, Jitun. Okay, I think that's all from it for now. Back to you, Alan. Thanks.
Okay, thanks, Wafi. Let's move on to Thailand. Tanyala, you got anything for Jitan?
Yes, I actually have filtered the question to remain only one question. From the China stimulus, what is the benefit to the ASEAN?
Okay.
Straightforward question.
So I think, right, for our parts of the world, right, I think we will definitely benefit if China does well, right? So if China does well, then our economies will do well, be it from tourism or be it from exports from our parts of the world into China, right? So they will have massive knock-on impact because no matter what, because of proximity, because of cultural, because historical, our fates, right? Our economic fates is more. It's closely tied to the fate of obviously China, and also if China does well, their FDI into our parts of the world will obviously increase as well if their companies are doing well, right? So be it investing directly into Indonesia for the commodities, or be it investing into Thailand for the auto sector, so there are a variety of ways that we can benefit if China does well. So in general, right, I think that our economies do have a very strong correlation to the health of the Chinese economy. So if they do well, we will do well, right? And obviously for parts of, like, for example, tourism, I think Singapore, Thailand, we all depend very much on the Chinese tourists. So if they do well, they come more often, they spend more, right? Then it's good for the tourism industry, right? And that obviously will have a knock-on impact for places like Bangkok, for Phuket, and even for places in Indonesia like Bali, right? So yeah, so I think I think our fates are quite intertwined together.
Okay. And another question from your answer. What would be the obstacle from the Chinese stimulus that they will not do well?
Okay, once again, a very, very good question. Okay, so the stimulus, in my opinion, has been very comprehensive, right? But the problem has always been implementation, right? And also more importantly, sentiments, right? If everybody is feeling good, then everybody will start to spend. Everybody start to spend, then the businesses will do well. Businesses will do well, then they will start to build. They will start to have capex, right? So all these are all secular in nature. It will be a virtuous cycle, or it could be a vicious cycle, right? So the Chinese government, in my opinion, right, I think the stimulus have been very sensible, very very targeted, right, and also very directed at the sectors and segments that they want to do well. But we are in the process of trying to change sentiments, which I think is very difficult, because it's hard to change, make somebody happy when they're sad. It's very hard to make somebody to be very, to not be discouraged, and be aggressive in the way that they invest, and in the way that they spend, right? And especially on the backdrop that the Chinese property sector is down. Chinese property sector is down roughly anywhere between, I don't know, 40% to 60%, depending on where you live, right? So I'm sure for all of us here, our property investment is probably a big part of our net worth. So if our net worth is down, a biggest part of our net worth is down 40%, I think we would feel poor. Whether you are really poor, that's another story. But no matter whether your house is 200 square meters, or 2,000 or 20,000 square meters, you will feel poor. We will feel poorer. But whether we are really poor or not, that's another story. But so we have to get through that, right? So I think the Chinese government is trying to boost the sentiments. So that's why they are using the stock market at this point in time to transmit that good feel good factor into the people, right? So that's one thing. And the other thing is obviously implementation, right? China is obviously a big country. What we are talking about now is just policies and big general directions from the senior leadership. And by the time it gets down to the individual provinces or villages or towns, it might take months, right? So there will be a time factor involved as well. So, but the other thing I want to highlight to everybody is sometimes the market is always very greedy, right? All of us as investors, we want something big so that market can go up 40-50%, and that's great, right? But usually from the central government point of view, that's usually not a good thing. When the market is up, let's say in the recent run up a few weeks ago, it went up anywhere between 30 to 40% in roughly 3 to 4 weeks, right? And we all know that for those of us who have been in the market long, we know that it's very difficult for us to catch. Those people who benefit is maybe the hedge funds, the syndicates, the prop desks, right? But the people in general, the mums and pop around the street, it's very difficult. With the market up 30-40% in 2 weeks, right? Chances are you will not be able to catch it, or some people might even be afraid to jump in. So the Chinese government also don't want that. What they want is they don't want what we call the crazy bull, Feng Niu, crazy bull. They want the long bull, Chang Niu, right? So the Chinese government do want a sustained uplift in the stock market, and not the crazy 30-40% in 3-4 weeks. That is scary for everybody, right? So this is something that I just want to highlight. And also related to that, right? The market is always expecting something big, the big bazooka. But end of the day, right? Chinese government is only looking at 5% GDP growth per year. With the economy of that size, 5%, and also what everybody else is doing, right? 5% is very decent, and only probably India can do better than China. Almost everywhere else, right? You have a GDP growth lower than China. So Chinese government is also well aware of that. They don't want an 8%, 10% GDP growth in 2025 because they will pay for it eventually. So 5% consistently over the next few years is good enough for them. So I think this is something that we have to keep in mind, that the Chinese government wants a long bull rather than what we call a crazy bull. Okay? Yeah.
Thank you.
Thanks, Tanala.
Thanks, Daniela. Okay, we move on to Cambodia. If you got anything for Jee Toon?
Thanks, Alan. I know we're running out of time, but just one quick question from Cambodia for our audience here. I think they are very much interested in. But no, first of all, thanks very much for such an insightful sharing, Jee Toon, and I think it's very comprehensive view from your side. I just want to drill down a bit more on the US dollar outlook, right? We are a dollarized economy, and we have very much been impacted by the strong US dollar and high interest rate. And I think the market view is that dollar will stay stronger as a result of Trump trade protectionists and potentially higher inflation. But we all know as well that it's contradictory that Trump is also very much pro rate cut, right? He was very vocal in terms of trying to intervene in the Fed policy. So what will be what sort of risk we're looking at that Trump may sort of inflict a lower interest rate, therefore bringing US dollar down and perhaps make it environment slightly more easy for the rest of the world? Thank you.
Yes, very good question. Once again, so I think Trump did make a lot of comments, trying to get the interest rate, or he said that he wants to have some influence, right? Some influence. He wants to have a say. Then obviously, from your Fed governor, you are Powell. Obviously, there's no way, because traditionally, the Federal Reserve, it's independent from the administration, right? No matter which administration, they just want to make sure that inflation is under control and GDP growth is decent. So that's their aims. That's what they're trying to balance, right? So you are quite right. I think Trump definitely wants it to go down. But however, I'm not sure whether he understands that all the policies that he's enacted is inflationary, which means have to go up. Right, so I think it's a situation of he wants his cake and eat it too, right? But we know there's no such thing, right? There's no free lunch in the world. And also, Powell has made it very clear that he will not resign, right? He will not resign, and he will stay on until at least 2026, which is the time that he's supposed to go off. So at least for the next year, right, he will probably be a lot more, I guess, stronger, or he might exert his own person versus the influence of Trump's administration, right? So I think the market is probably looking at, I guess, long-term, short-term, right? Okay, because over the next few quarters or so, if let's say Powell is still in charge and he's his own person, as what he mentioned, and I do think so, because I think that's what he wants his legacy to be, right? This is his last chance to make it big, and this is last year. I think he has done well in trying to control the inflation, right? So far so good, and he has managed to engineer a soft landing for the US. I think he still wants it to carry on, right? So in my opinion, I think he will look at the data. He will look at what's happening to the US economy to adjust his growth. But what Trump is doing right now is in fact impacting inflation expectation beyond Powell, right? Because no matter policies, if it comes in, let's say, for example, if you think about it, right, he comes in January of next year, he will do his thing. They'll go to Congress and all of that. So by the time he can enact any of these policies, will maybe, if he's lucky, in June, if not, it's September of next year, right? And by the time the policy hits the ground and for it to hit really the economy, that might even be 2027, 2026, right? Before inflation comes through. But the market obviously is always discounting all this, right? Market understand where it's coming from, and try to predict, right? And the market is reacting in terms of future inflation expectations. So once again, I guess my point I want to highlight is we are talking about inflation expectation, whether it's going to happen next year, because obviously Trump policies is not going to impact the inflation data that will come out over the next 2 or 3 quarters, right? Because it's he's not there yet, right? And inflation is always backward looking, right? It's so I do think that Powell has a bit of leeway, right? Because as long as inflation is, it's okay, economy is doing okay, then he has that flexibility, right? It's the future that I think the market's also worried about. So that's why I say that, if you look at some of my analysis, I do it mid-term and longer term. Because the shorter term, the knee-jerk reaction is very quick, right? Or pro US. Because once you cut tax rates, right, straight away, the money is in your pocket, right? But all the policies, it will take time to enact, and whether there will be second derivative factors, whether there will be tit for tat retaliation, that's another story. It's chapter 2, chapter 3, right? So people are trying to figure out, should I just discount chapter 1, or is chapter 1 already discounted? Should I go to chapter 2? Or should I move forward and look at chapter 5, right? So I think the market is always, that's what makes it so interesting. You don't really know, right? But we know at least for sure, if you look at the currency, which I look at, right, because it's the most, it's very fast. It's fast money, it's huge. It's a lot of people can get involved. You can see, right? There's been a very sharp reaction, but more or less over the last few days, it has more or less stagnated because people are starting to realize, okay, so maybe let's chill out for a while, right? Let's just think about what is future implication. Right. So yeah.
Thank you, Toon. I think maybe a quick follow-up question to that,
Sure.
because dollar has actually rallied quite significantly in the past 2 weeks or so.
Yep.
What would be your view over the next 1 or 2 month time horizon?
Okay. So I think the very fast reaction is already there, right? But I think if the policy continue to be pro-US, right, pro-US, I think the dollar will have a shallower rise, but it would not rise that much, or would not have that kind of acceleration that we saw over the last 2 weeks, right? Especially now the market is trying to decipher his appointments, right? Because right now we are seeing news of, okay, who's going to be his treasury secretary, who's going to be his commerce minister, who's going to be his defense minister, right? Whether this minister can get approved, well, that's another story altogether. So the market, has more and more things to worry about now, right? Rather than a very simple Trump won, big mandate, rate sweep, easier path for Trump compared to his first term, right? So I do think that part is already discounted for. So that's why you are starting to see a bit of resistance, and then, but nevertheless, I do feel the policies when they come out over the next few months, next 6 months, 9 months or so, will be quite pro-US.
Thank you, Jee Toon. That's all from me. Thank you very much.
Okay, thank you very much. Thank you.
Thank you, Eve. Okay, maybe we got time for our last question, Jee Toon.
Okay.
Okay, this is on technology stocks. So some of them, they are saying that Huawei technology has yet to break through. The chips they are using are still from TSMC, right? What's your view on China technology advancement from here? And then the second part is that is SMIC still showing a strong prospect? What are the tech stocks we should focus on?
So let's talk about Chinese technology in general. Okay, so US technology, or I would say US now. Okay, Western technology, because US seems to think that TSMC is theirs as well. So I would say the US centric technology ecosystem is definitely way ahead of the China centric ecosystem. That's for sure, right? But I also think that valuation is also reflective on that. You look at the valuation of Nvidia, look at the valuation of TSMC, you look at the valuation of Samsung, right? So the US centric technology stocks does reflect that. If you look at the Chinese technology stocks, right, I do feel also one thing, that I do not think that they are going to roll over and play dead and say, you know what, I give up, right? I give up and that's it. I will not improve on my expertise in terms of the semiconductors. I think that's also not a path that is available to them. So they will continue to improve, right? So my view is that, yes, I think we are going to see some improvement or some catching up between the the Western ecosystem and the Chinese ecosystem, right? So I think that is for sure. We are starting to see signs of that. Right? And bearing in mind that, I just want to highlight one point is that for the Western ecosystem, right? Obviously, their technology is very good. TSMC and everything is great. You know, it's to scale and it's industrialized. But for the Chinese ecosystem, right? If you're a Chinese operator, there's no choice for you. Even if the chip is 2 times as expensive, because if let's say the failure rate is higher, right? And therefore the chip is more expensive, there's no choice for you. You still have to buy from the SMIC. You still have to buy from Hua Hong. There's no choice for you. Even it's more expensive, you just have to make do with that. Either you have to use your software, or you just have to price it more competitive, or your margins are lower, right? So my view is that the Chinese are also trying to find a way to get around this, right? So that's why for me, my take is that my view is that the Chinese technology ecosystem will have to improve. So they will put more money there. They will have policies that will benefit, because you know these two giants are fighting, right? And no one is going to say that I give up, right? So we do have to invest with that kind of mindset that both of them will continue to try. Right. Yep.
Okay, thanks, Jee Toon. I think that's all the time we have. We can never have enough of you, Jee Toon. We hope, we wish that we got more time for you, but unfortunately we don't. But we hope that it's a good event and it has been informative for everybody. Our sincerest thanks to Mr. Tan Jee Toon, Chief Investment Officer and also CEO of RHB Asset Management Singapore. Thank you for your time. We also want to say a big thank you to all the participants and those that join us from near and far. Thank you for joining us. We encourage you to continue to log into RHB Morning Kappa at 8 daily for all the latest information and news. So on behalf of RHB, thank you again and for joining us today. Have a great afternoon ahead. Thank you very much.
Thank you everyone.
Thank you
for your
Jee Toon.
time.
Thank you, Alan.
Thank you.
Thank you,
Steve.
everyone.
Thanks
Bye-bye.
all. Bye-bye.